I would say I'm very excited about going into the new year around crypto, and I'll tell you why. And I have to be transparent. You know, I'm an investor in Circle, which does USDC. I have many positions on, but they're one of them. And also an investor in FTX, both the US and the international company, and a paid spokesperson for FTX. So with those disclosures aside, you're going to see something remarkable at Davos this year, which happens in mid-January. Each year, that global gathering has a new theme. You know, a few years ago, it was global warming, and then it became deglobalization, then globalization. This year, you're going to see crypto at the top of the list of what is being discussed by global bankers, specifically around payment systems. Where we talk about a ACH transfer between banks or SWIFT transfer internationally, these were private sector innovations decades ago that were heavily regulated by global governments. And for the first time now, products like stablecoins could really disrupt that at a significantly faster, more productive, more transparent, more auditable, but above all, far less expensive system for transferring global assets. And so you're going to see companies like Circle headline at that event. And I think it's going to be, Davos will be you're going to see a lot of crypto-based conversation at a global level with global governments as they struggle to find some kind of policy and regulation. And that bill, the Stablecoin Transparency Act, is at the forefront of that. That is a bipartisan US bill that I think could be marked up by the time we get to that place, because it'll be after the midterms on November 8th, which is going to be significant for crypto policy. I think what will happen in the House will help crypto policy. But I think all of this is going to be really fascinating, and why everybody should stay on their toes. Lots of change. You have to remember, the most hated man on earth is always the chair of the Fed, regardless of who they are, man or woman. Everybody hates the Fed. Everybody second guesses the Fed. Everybody says they're doing the wrong thing all of the time. You can't make anybody happy when you're the Fed chair. And that's exactly what's happening here. He's trying to, in this case, in Powell's case, engineer a soft landing, which is near impossible. No one's ever seen that happen. However, data coming out this morning proves that we are not yet in a recession. Everybody kind of knows that just by the feeling of the consumer being so strong. And so for the first time in a long time, people are thinking, wow, maybe he can pull this off, and we would know sometime in Q2 next year that he could actually bring in a soft landing, slow down inflation. After all he needs, the Fed in aggregate needs, the board itself needs, is some indication that the rate of increase of inflation is slowing. That's the key right now. And so we don't have that quite yet. There's a narrative in the market, and I want people to understand this, and how CPI data is gathered. So much, 40% of CPI data is housing, shelter. And shelter is a very slow index, and so it takes up to 18 months to actually have an effect on it. But people in different markets are starting to see rent rates slow or flatten, or housing prices flatten. So really what we're probably doing in the CPI number right now is over-reporting inflation. And that narrative has been coming in with Professor Siegel, who's been talking about this ad nauseum for the last 6 weeks. But you know, he has a point. You can't deny the fact that 40% of CPI is shelter. And maybe we're over-calculating it. Now, people do this all the time, and I'm guilty of it right now, trying to say, well, here's why we shouldn't believe this number. It's just more Fed beating and more Fed hating and more, telling the Fed what to do. And the truth is, they don't give a damn. They don't listen. They have their own mandate. They're going to do what they're going to do. And I say that'll be 75 basis points coming to a theater near you in the next few days. Well, I've come to the conclusion, because I have my own index to look at, which is my 50 plus private companies, that 50% of this inflation is actually because of supply chain that still hasn't been fixed. Deglobalization, I'll give you just a case study. I've used it so many times. Let's say I'm making gym equipment in Fargo, North Dakota, where I am. And prior to the pandemic, we used to buy all of our metal, our barbells, our screws, some of the infrastructure for the benches from Asia, from China, from Vietnam, from other countries where it was 30% cheaper. We can't get those supplies anymore, partly because the ship that has it on it is stuck at LA Port. Yes, it's still a problem. LA Port has not been fixed yet. And so we are forced to go buy that steel made here domestically. Now, whether that's a good thing or bad thing, we can debate that till the cows come home. However, it's 33% more expensive. So we take those barbells and those benches, mark them up 33%, sell them into an ever-increasing demand market. Our sales have not slowed, but it's 30% more expensive. That, my friends, is inflation. And it's not going to change until I can buy those barbells again in Asia at 30% less, which is no time soon. So the fact is that inflation is self-inflicted by the fact that we're starting to slow down in cooperation with global suppliers. We're fighting with the Chinese, we're cutting off their chips, they're reciprocating. All of that stuff is occurring. And on top of that, people are concerned about domestic supplies of things like semis and oil and gas, because it's the only thing you can count on. The economy itself, though, proven again by numbers today, is doing very, very well. That's because, again, I'm speculating, $6.7 trillion worth of cash was printed in the last 30 months, still sitting in the checking accounts of the consumer, and he and she are spending. What I say is the lesson that every investor learns over a lifetime of investing: it is 100% impossible to time the market. Everybody's tried it, everybody's had their fingers burned. And I'll give you an example over the last 3 weeks. And so if you looked at 2020, which was an extremely volatile year as we started to understand what COVID was doing to the economy and the global economy, the entire returns of that year, which was actually a good year for equities, happened in 19 trading sessions. 90% of the returns happened in 19 trading sessions. That's 8 hours times 19. Wow. And if you were not in the market that day when it went up 1,200 points or 800 points or 1,500 points or whatever happened in the volatility, you had no returns whatsoever. The problem is which day. And I remember in March, April, May of 2020, when I was in Miami in lockdown and working with my team on our portfolios, our global operating company portfolios, watching us lose millions of dollars by the minute one day, and then the next day watching this reverse of it. Just an incredible amount of volatility. And having seen that movie before, I was able to tolerate it by drinking great Chardonnay and watching the sharks eat the pelicans outside of my balcony, because for the first time in 500 years, no people were allowed on the beach. And the great whites came right to the shore to eat the pelicans. It's never happened before. I know as an investor, I can't time the market. So buckle up, drink some good O'Leary Chardonnay, just selfless plug. And I did that every day at 4:01, and I just lived through that period with my team. And we accomplished that market return. Same thing about every other asset class we're talking about. You want to guess bonds? Buy a portfolio of fixed income with short duration under 5 years. Right now, on triple Bs, you can pick up 6, 7, 8% if you have fortitude. Yeah. And so I am doing that. I'm trying to diversify my portfolio, and that's the only free lunch in investing. It's always a good time to start a business. It's actually historically proven now that many businesses started in chaos and declines, and periods like 08, 09 ended up flourishing and becoming huge successes. Desperation is mother's milk of necessity in terms of figuring out what to do next. And great entrepreneurs know how to pivot. I think what we learned about the pandemic and the companies that survived in my portfolio figured out a way to use technology, go direct to consumer, right across the board, where margins were significantly better, and the data they're collecting now is significantly better than they used to get from retailers or just selling through Amazon. So I would argue that catastrophic outcome of a global pandemic made a lot of companies a lot stronger. And today we're having one of our best quarters ever and some of our best cash flows ever, because so much of our sales are now at full margin, direct to consumer, with information about their preferences. I think entrepreneurship is never a destination, it's a journey. I encourage everybody that wants to do it. And if you look at graduating cohorts of engineers that I teach, I'm going to be doing this again in Massachusetts next week. I always go to the graduating cohort. A third of the class, men and women from all around the world, will start businesses. So about 2/3 will be employees and 1/3 will be entrepreneurs. It's not an easy journey. I've always told people to get ready to sacrifice, because that's what it's going to take. But ultimately, it does give you personal freedom if you're successful, not about the greed of money, but the ability to pursue the things that mean something to you, the freedom of choosing your own time and what to do with it. I actually think pivoting is part of the DNA of a successful entrepreneur, a successful manager, because the facts change all the time, accelerated basis today. There's so many things occurring, just not only globally, but domestically, that you have to look every day at what is happening and to make decisions. And what I try and do is each day I leave the office or wherever I am with 3 mandates for the next day, 3 things I have to make a decision on. And I don't do anything until I get those 3 done the next day. It's very productive. And very often it's because of something that changed. Yesterday, rates were changing. We were trying to manage some of our cash flows, and I sat down with my team and we looked globally at where to deploy some of this. And we made decisions that we would have never made 2 months ago because rates are up. Liquidity is now starting to dry up a little bit in the credit markets, so we're trying to take advantage of that. These are all new pieces of information, and so great entrepreneurs absorb information, stay flexible. That's called pivoting. Take the new information and chart the path of least resistance, the path of least risk. And that's why they're leaders. People follow individuals that are able to do that because they trust their decision making. And when they don't trust it anymore is when you get a big collapse. And I'll show you an example of that happening as we speak. Look what's happening to Meta in Facebook. People are no longer believing in the big vision of the metaverse. In the case of Zuckerberg, and he's got super voting control of that company, he may not care, but it's being reflected in the value of the overall company. Another 20% decline today. I would say I'm very excited about going into the new year around crypto, and I'll tell you why. You're going to see something remarkable at Davos this year, which happens in mid-January. Each year that global gathering has a new theme. A few years ago it was global warming, and then it became deglobalization, then globalization. This year you're going to see crypto at the top of the list of what is being discussed by global bankers, specifically around payment systems. Where we talk about a ACH transfer between banks or SWIFT transfer internationally, these were private sector innovations decades ago that were heavily regulated by global governments. And for the first time now, products like stablecoins could really disrupt that at a significantly faster, more productive, more transparent, more auditable, but above all, far less expensive system for transferring global assets. And so you're going to see companies like Circle headline at that event. And I think it's going to be, Davos will be you're going to see a lot of crypto-based conversation at a global level with global governments as they struggle to find some kind of policy and regulation. And that bill, the Stablecoin Transparency Act, is at the forefront of that. That is a bipartisan US bill that I think could be marked up by the time we get to that place, because it'll be after the midterms on November 8th, which is going to be significant for crypto policy. I think what will happen in the House will help crypto policy. But I think all of this is going to be really fascinating, and why everybody should stay on their toes. Lots of change coming.